Hey everyone, Rob and Blackwatch here. How's it going? Today we're going to be showing you guys our phantom trading my session indicator. I'll let Blackwatch kind of introduce it to everyone. It's a cool little thing that we put together.
Hey guys, so we kind of had this idea to basically build an indicator that would just highlight some candles based on trading sessions that you might have. So there's the FXN Asian session or Asian range indicator, which will just put a chart color or a color on top of the London session, the Asian session, the New York session, whatever. As supply and demand traders or as phantom traders, we often find ourselves in situations where we want to trade just a specific set of hours. So for myself, for example, I trade from about 8 a.m. Eastern till about 11 a.m. Eastern. Sometimes I know there are people that want to trade just before New York Open and just to the overlap, whatever it is. So we ended up making an indicator. Special shout out to Alex, who helped us put all the Pine script together for this, where we can then go in and just custom hours, and it will highlight those specific hours for any given day. I guess, the main idea behind it is to just see everything in hindsight easily, so you can tell what session per day is what you want to look at, and then just you can use that for backtesting and case studies and that kind of stuff.
Yeah, rather than scrolling through price and trying to figure out, oh, what session did this happen in? It's just marked out. You're able to see it.
Yeah. So I guess we'll show you kind of how to find it first. If you go up to indicators and then you just go into the search, you can just search for Phantom, and it's called My Session Range. You'll see it's published by somebody named Dorkstorm, which is me. You just click that, and then what it'll do is it'll add it onto your charts like this. And the default session time, I believe, is London, so which is 3 a.m. Eastern. But for me, like for instance, if I say I typically trade from 7 a.m. Because I'm in Texas, so this would be 8 a.m. here Eastern. Yeah. And then the end time for me, I'm typically trading until about 12-ish, 12:30 or so. And what you can do is, if you want to, you can change the color of the boxes themselves. You can go into the style, and you're just going to adjust the fill session range color. So for this, I'm probably just going to put on gray and drop the opacity. I'll keep the opacity up so you guys can see a little bit better. And then if you want to, on the current day, it's always going to put it in a box. You can just turn that off by unchecking the lines box here under style.
Yeah, so it's kind of cool because obviously the filled box will also show you like the high and low of the day, like for that session anyways, right? So usually you want to try and like keep it tied to whatever the session is that you're trading. So in Brian and my case, like I pretty much am looking at like 7 or 8 a.m. as my open, and then you can put it as far as close, which would be like 4 or 5. But we typically stop trading around like 1 or 2. We don't take trades after that. It's very rare.
Yeah. Now this is great for people who are working full time or part time or whatever, and they don't get to hit typical session opens, and backtesting something where you want to see a very specific range of prices. This makes it a lot easier for you. Most people that are available for New York Open are probably trading the same hours and that kind of stuff, or London Open, that kind of thing. It's typically the same. But one thing I would recommend as well is that if you go into here and you click on it, you can actually favorite these you'll see some stars here. Just make sure you favorite it so it's always here, just in case you kind of lose sight of it.
The other thing that I'll quickly mention is if you trade multiple sessions, obviously you can just duplicate the indicator and change the settings. So
you can actually do that now. So what you do is you can just add it back in. So I think you just click it twice. Then we can say, for someone who's looking at both London and New York, you can just do this again and just change your input times here. So we'll just leave it on London, but you can add as many as you want. So if you want to test, just the London kill zone, and then some of New York or something like that, you can do that as well. For now, we'll leave it off though. I will change the color of this to make it a little bit easier to see. Let's do blue. Yeah, doesn't really matter. But yeah, so one of the primary ideas behind this is just that, again, you can look back at all this previous price, see exactly what time or what session or whatever time within that session that you want to trade, and then backtest or build case studies specifically around those times to find out, which days or which session range, I guess, is going to be your most profitable session that you may be available for. So yeah, what do you think, Rob? Should we just look at some data or see how we would go about using this to build some backtesting data or case studies?
Yeah, I mean, I think the way that I typically approach it, because I use pretty much the same thing. I'm going to start using this, obviously, because we built it. It's pretty cool. I look for, usually within New York session, I'm looking for that high volatility, right? We know there's a lot of volume in the market. It's the hours that we trade anyways, right? So usually what we're looking for are, obviously we'll mark out structure, liquidity, the whole 9 yards. And then we'll start looking for, certain POIs that we're tapping and reacting into in that, sort of section of price action. So we'll look kind of before it. I'll try to show you guys an example of what I'm talking about. I think there's a couple good examples here already, Brian. If you, even just like this, right? If we mark this out, and we can see, I'm not sure what session this was, but you can see, look, this tapped into New York, and there was some volatility here, right? We respected it. It's not always going to be the case, right? Some days, we're just going to have straight up continuations from London, right? This being New York session that's being, marked out and highlighted. And then same with this one. It's what is this tapping into, right? We can investigate. Did it respect this? Did it sweep this high? We don't know, right? Until we mark it out. So I'll let you mark it out, Brian. But yeah, that's kind of how I approach it. It's, it doesn't have to be super serious.
Yeah. Even if we just look at this price action here, what we can do is we can just say, we know that we're in session, right? Because we have price within our session range indicator. And if we have any valid supply or demand zones that price may be approaching based on however you want to analyze it, maybe you are a supply and demand trader, maybe you're not, maybe you trade something else. This is a good way to kind of use this as a confluence for that timing. So what we can say is we know that we have, based on the phantom strategy, that we have price tapping into some demand and then giving us a nice extreme point of supply and a bit of structural liquidity here, and then prices play through it. So knowing that we're in session, it looks like we have the potential for a long and a short on this. This is Thursday. I don't know if you guys can see that, but this is Thursday here. So, what we'll do is we'll mark up this as well. And the idea behind marking up things in hindsight, by the way, if some of you guys aren't familiar with this, is basically to build confidence around a certain strategy. So it's more like building case studies. And what you can do is you can develop, or just if you have a specific entry model, what you're going to want to do is you're going to want to find out on what time frame you're going to get those POIs built, and then scaling down to see, okay, well, I know I got a reaction here. I know I got a reaction here. What I can then do is I can go down to my entry time frame, which for us is probably going to be the 1 minute. And then we can look at this and we can look to see if there's some setup that fits our plan. And then we can chalk this up as a profitable day, or maybe would have taken a loss. And we build those case studies over time. So yeah, I guess what we'll do is we'll just drop down, just kind of see briefly what some of the opportunities were in here, if there were any for us. We're a little bit too far back for 1 minute.
Yeah, it's all right. We can maybe look at 5 if it lets us.
Yeah, let's see.
Yeah, this is from January.
Yeah. Potential 5 minute entry here. So again, we know we have the demand reaction. We understand that we're in session. Mm-hmm. So based on this session, right, we know, again, we're near New York Open or just before potentially. This would be just before, right? So this is looking at about 6 a.m. Central Time, which is 7 a.m. Eastern, which is an hour before New York Open, right? So we know that there can be a lot of volatility in the session, as it's the New York kill zone. So what Rob has marked up here is we basically have a supply zone, right? And then if this confuses you at all, right, if you're not really comfortable with supply or demand, these are concepts that we teach at Phantom, and we can kind of show you how we do it there. But we have supply, we have a reaction, and then that supply essentially fails, indicating that price wants to trade higher. So from that level, we're just looking for potential demand zones for price to tap into. So we have this price breaks above here. So it looks like it's using more of this range, but demand, that might be hard to see with this. Right, and it looks like price is using a little bit more of the demand, essentially this candle here, which has been tapped into from there, right? And again, we're not looking for anything crazy, we're not looking for anything accurate, we're just looking for a potential setup that is in our session and kind of learning from there what we could have gained in this day's session. Right, we could get a nice healthy stop loss about 4 pips or so.
Yeah, 4 or 5 GUs, perfectly normal.
Yep, and that's an easy 10-hour trade, right? Yeah. And then from here, we can see on the flip side again, we know that we've tapped into a 15-minute supply, right? And again, remember, that's a 5-minute entry. Typically at Phantom, what we're looking at is 1-minute entries or 2-minute entries, something along those lines. So we know that we have nice supply here. And then again, we have another nice reaction within our zone. And we also understand that from a general perspective, we have overall bearish price action. So we'll go back here, go to the 5-minute again. We'll see if there's a setup that really fits our strategy. At the moment, I don't know if I see much.
No, I don't think on the 5-minute.
Yeah, not on the 5-minute. I can see something in the wicks that would be a little bit more apparent on the 1-minute, which I'll show you guys where the POI would be. It would essentially be within this, which again, we can, with the finer details are going to be a little bit easier on the 1-minute to see, but there is a potential entry here. There's some other confluences that we would essentially use to find a short within this, but it does look like there's an opportunity here. So yeah. What we can do is go back to the 15.
I was going to say we could go to like more current price action if we want to show a 1-minute example.
Let's do that. So I mean, I think there's quite and another good thing about this is when you're just collecting data, right? So you're just looking at this in hindsight. You can say, for a fact, it's like, okay, not the best price action. There's probably some decent longs in here on the 1-minute, decent short in here. Obviously, right here, really decent long, really decent short, decent shorts, rangy, not the best, rangy, not the best, decent short opportunities, but ultimately a little bit rangy. Good long positions, good long positions, good long positions. Like, generally speaking, like if you can just take this data and say on any given week, there's at least 3 to 4 good opportunities within my session range. You can say like, okay, the session time is profitable, right? So you can use that data to your advantage.
Yeah.
I guess we'll just kind of let's just look at this one. Nice supply here, which again,
looks like some sort of news. Yeah. That must have been some sort of high impact news, right? That huge volatility.
Yeah, I'm not sure.
But that makes for a good POI, right?
Yep. So we'll just look at this, right? Now, generally speaking, we're still technically bullish. So taking a short from here, if there is a setup, could be potentially counter trend. It's also, the entry itself looks like it would be within our session. Outside of this would technically be outside of our session. So if you're sticking to your plan, you wouldn't necessarily be trading within this. It doesn't mean you can't take an entry and hold through this. It's just you wouldn't want to find entries within this, again, to be consistent and to stick with your plan. So here I'm going to find basically a reaction. Why did this go long? See if we can find a trade from there. Looks like price is reacting to more of this range in here. So I'm just going to take this whole thing as demand.
I remember that range is, 4 15-minute candles ends up being an hour candle, right?
Yeah.
Oops. Not that we really go on the hour time frame much, but when you have like a series of candles and consolidation like that, even more, eventually it's going to add up to 4 hours and so on, right?
And one nice piece of data that we're noticing inadvertently here is that previous sessions are leading to pretty decent points of interest for potential reactions. So so that's the 1 hour demand zone here. Price tapped into it, pushed up, and then looks like it was used for liquidity later. So we'll just kind of study this. It's not in session, but it's good to have the data. So we'll go to the 15 again. And we should have 1 minute data here, right? So let's just go down.
For sure.
Again, we're just looking in hindsight. We're just collecting data, right? So here, based on the 1 hour zone, we can see here that price on the 1 minute was overall bearish. It hit our POI, and just sorry to go back to the 15 real quick. Right. Generally speaking, we are somewhat bullish in the substructure, right? We've taken out this high here, so there is reason to look for longs from this point. And then, so what do you see here, Rob?
So as far as I can see, the way that I personally approach this is, because we're looking at 1 minute, kind of coming from bearish price action into our nice like 15-minute bullish POI, right? Our level of demand on like the relative higher time frame. What I'm going to look for is the failure of some sort of 1 minute supply. And then that's when I'm going to start engaging with the market. For me personally, and Brian, I know how you trade. It's very similar. I learned from you, right? We kind of learn from each other. I'm not looking to like engage with the market like too early, if that makes sense. I want to try and wait until there's multiple failures of these supply levels, right? So if we were to just mark out like these wicks, we have that. You could go as far as waiting for this one, right? And there are cases where I'll wait for that one even to fail before I get into it. Because to me, this here, there are a lot of opportunities to take losses, right? It may work here and there, but you're going to pay for it in your strike rate. And lately, the way I've been trading is just like being conservative. I like waiting. I already see the entry that I would have taken, waiting for this supply up here to fail, right? The furthest one away.
This one?
What about you? Yeah, exactly.
Yeah. So, same thing, right? So what we always want to do, one of the things that we teach at Phantom is to, there's a time and place to be aggressive, right? Having this like massive bearish momentum here, might scare some people out of taking a long position, right? So knowing that you want to wait for a good confirmation, understanding that in order for demand to be properly in control, you're going to want to see supply fail. But not only do you want supply to fail, you want demand to hold. So what you're going to do is basically just do that, right? So you're going to have these reactions. This would be the optimal entry for both Rob and myself. There are opportunities below, right? Depending on how aggressive you want to be. Because, to be fair, if the POI is very good, price might give a reaction that might not allow for confirmation. It might set up once or twice and then just be off. But again, we're a little bit more conservative, and that's totally fine. So in regards to our session, right? Our session range being in session and tapping into a POI, this is a really strong setup. Setting something like this with a nice, you could get a tight 2 pip stop loss, but I would probably do at least a 3 pip, 2.5 minimum for myself. And then if, again, for just going to the 15, because you're going to want to find valid supply zones, right? Something like in here would be a nice zone. This high should be weak in theory, but you do have decent supply in here as well, which mitigates this candle here, right? So you have good areas to take profits or partials, right? Yeah. So you have this. So I would say we'll just cut it off there. There is an easy 16R in session, right? Now, again, on the flip side, we might have an opportunity for a potential short. I already see the entry.
Yeah.
And I'm just going to mark up the entry just on its own. But essentially, we'd be trading from here. Right? It gets swept just by a hair, but I believe there's another entry slightly after that as well.
Yeah.
Totally agree. This guy here. Right, just like there. So you would enter on both that and this. Again, won't go to too much detail on the entries, but this is essentially what you're looking at. 2.5 pip stop loss there. This one I'd probably be a little bit happier with a 3 plus.
Yeah, I'd definitely cover that.
Yeah, for sure.
Nothing wrong with having a bigger stop.
Yeah,
especially on GU. There's spread, right? Like,
yeah, exactly. And the thing with this is not to show you that you necessarily need to take both of these. It's just that if you were to miss that one, there's an extra opportunity here, right? If you know what I mean. There's always multiple opportunities typically. So yeah, and then you go down to the 15. You know, you have some nice demand here where you might want a partial from. And then if this fails, you should see a decent reaction or a decent push to the downside, kind of depending on what price does. I have no idea what price does here. But let's just see what even happens. Push it forward, right?
Yeah.
TP1.
So considering that we are like TP2. Technically, I would say it's bullish. Oh, it's bearish based on that huge like news move that happened on the 17th, right? Depends on how you look at it. If we're looking at order flow, like you could argue, okay, yeah, I mean, it's bearish. Maybe you're counter to order flow. You know, you don't necessarily want to hold it. You should always be looking to take partials at these like key levels that Brian's marking.
Yeah, absolutely. Yeah, and you know, these are just like very raw examples, not too much detail, but understanding again, this particular session, right? Something that you're looking at now, it is, in this case, it's an hour before New York Open, and this goes until about 11:30 Eastern, which is just after the London-New York overlap closure. Yeah. So London's closed, New York is just kind of trailing off at this point. So it goes to show you, just in the few examples that we've shown, that, you know, getting this kind of data on your particular session, whether it's somewhere in Asia, just the London kill zone, because maybe you can only trade just before you head to work. Something like New York, again, maybe you can only trade just before you head to work, that there is opportunity before session opens. There's opportunity throughout the day in lull periods and that kind of thing. So,
yeah,
you know.
So, Brian, a couple of questions for you. In terms of staying focused in session, right? Using the session indicator, how do you typically approach that? I think we have a similar way of doing it, but you know, let's kind of let's go through that. I'm curious.
So, I mean, the biggest thing for me is definitely limiting distractions. And I think that kind of goes through all aspects of life. I work on a few different projects outside of Phantom, outside of trading itself. And my biggest enemy is probably my phone. So there's a lot that I do to kind of keep myself in check in terms of limiting distractions. One of them is just making sure things like Discord is closed, right? I time block everything. So, you know, one of the techniques that I use to make sure that I'm giving everything the appropriate amount of time of like dedicated focus is something that it's called the Pomodoro technique. It's essentially just going through different cycles. So you have intervals of 25 minutes. So you work for 25 minutes, you take a break for 5 minutes, get up, get away from your desk, get away from your charts, whatever it is. And then you start that 25-minute interval over again until you've kind of completed that thing. So if it's an in-trading session kind of thing for me, it's more about time blocking it. So understanding that my session is approximately, 3 hours long, 4 hours long, whatever it is. I might not be at my chart the entire time, but I'll map out my higher time frame zones, 15-minute, 4-hour, and I'll set alerts, stuff like that.
So that leads me to my next question. Tell me a little bit about how you use alerts, how you utilize that tool in Tradingview.
So a lot of it has to do with, like, let's say for instance, like all this stuff was just cleared out, right?
Yeah.
I know that based on the data that I've collected from my session range, that I have some pretty solid POIs, and we'll just say that, price is not quite at that level yet. I know that I have some pretty solid POIs at various previous session highs or previous session lows, such as this one here. drag this one over, right? And we can just say that price hasn't quite reached any of this yet, right? If I know that my session is approaching and price is in a trend headed towards that POI, what I'll do is I'll just, if you click over here on this plus button, I'll just make sure that the cursor is kind of lined up just above it with a little bit of a buffer.
Yeah, I do the same.
And I will hit the plus button. Oh, that is not what I was supposed to do.
I think it's the wrong tool. You can also right click too, I think, and add alert. That's how I do it.
Oh, I know why. I'm sorry. It's because we're in bar replay.
That's why, yeah.
So, but essentially, yeah, the idea is, let me get out of bar replay because I want to show you. So it's like, for instance, if I was interested in this POI up here for Monday or something, I would click on this and I would just say add alert for this pair at this price.
Yeah.
Click that. And if you ever wanted to edit it, you can double click this and you can say, you can put in any message here, price approaching supply, right? Whatever. And then when that alert goes off, if you have it, the app on your phone, you'll get the app on your phone. It'll tell you what that alert is for specifically. But yeah, that's typically how I do it.
Perfect. Makes sense. How about journaling your trades and doing like your end of day markups? Do you have any like specific process for that?
Yeah. So for me, the biggest thing for journaling is just using Notion. I've tried online journals. I'm not a huge fan of them because the majority of them are just glorified spreadsheets with just like nice aesthetics. They're all still very manual. So for me, I just like to use Notion. I have a P&L calendar, and then I have a separate section for logging my end of day markups. It's just kind of like a gallery field in Notion where you can just post screenshots. And for the P&L calendar, it's if I take a live trade, I just post in there all my markups for the higher time frame, mid time frame, lower time frame, and my MT4 screenshot for my entry.
Yeah.
The reason I put the MT4 screenshot entry in there is because I often market execute, and sometimes my fills are really poor, and it can be a clear indication of hesitation in the market if your fills are really bad, but your spread is generally good. So it's a good data point to have if you tend to be executing a little bit late. That kind of thing.
Yeah.
But,
I definitely do a similar thing with live trades that I execute. It's a little different, but I will either take a screenshot or like really quickly input the numbers that I see on my MT4 in the little bar at the bottom, and input that into the Tradingview trade template, so I know exactly where I landed. Obviously, the data feeds are going to be a little bit different depending on what broker you're trading with, but that's kind of how I approach it. It's similar.
Yeah, nice one. Yeah. So, what about? All right. So, I mean, I guess I got one question for you because I think a lot of people have this issue in general. Is over trading, right?
Yeah.
So I think a lot of people, like something like having a session range is important for myself because it tells me to stay within that range. And if I find myself trading outside of it, then I'm going against my plan.
Yeah,
there's
definitely
potential for over trading, that kind of stuff. I guess, like, do you have any like quick tips or anything like that to kind of help people avoid over trading?
For me, it's really simple. I don't go into every trading day expecting to take a trade. And on top of that, I have very strict rules as to how many losses I'll take on a single day. For me, it's no more than 2. And if I violate that rule, I'm closing MT4. In fact, if I take those 2 losses, I'm closing MT4 anyways, right? Because I don't want to have the temptation. So it's a matter of, don't rely on your willpower, just follow your process. You don't need to be sitting here taking, 30 trades in a row on a single trading day. Now, I think if you're up for the day and you want to maybe risk your profits, that's fine. But obviously, you can give a lot back too, and I think that's something we both experienced in the past. So that's my little tip for that.
Yeah, I think the biggest thing there is like basically out of sight, out of mind. The more you sit in front of your charts, the more you're just gonna force a trade.
Yeah, and, absolutely.
It can make your green days red really quickly, or your green weeks red. So
yeah.
Cool, man. That was good. I think, again, if you want to find this indicator, it's free to the public. You just go in and you just search for Phantom My Session Range.
Yep. And
you can just load it onto your charts there.
Yep. And if you guys want to learn more about how we trade supply and demand, visit us at phantomtradingfx.com, or subscribe to YouTube. We'll be putting out more free videos like this, kind of alluding to how we trade. We're not going to give everything away, but we do want to try and help people out there. We're trying to trade the Forex market, which is not the easiest market to trade, but yeah, that's pretty much it.
All right.
Take it easy.